So I have a question for you guys. Why does the 10-year treasury matter?
Oh.
Why doesn't it matter?
Okay, so multiple reasons. The 10-year is our government debt, which is buyers and sellers or auctioneers demand yield for certain reasons. So there's, without going into too much detail, I guess there's two basic reasons. One, the 10-year is tied to mortgages,
Right.
which is very important from a consumer perspective. But markets move on earnings potential. And there's this math equation that a lot of analysts like to use, which is the PE ratio. We use forward PE ratio. In order to get to the E, which is expected earnings of a stock, so just what I would expect earnings per share, is something called a discount cash flow model. You take out the risk-free rate, which is a denominator. So if the 10-year yield goes higher, then that actually reduces earnings just by math. And that's why it creates a sell-off.
I see.
Yeah, I will say too, the first Trump presidency was all about the stock market. The second Trump presidency is all about the bond market. So if you want to know what's keeping Trump up at night, look at the 10-year yield. If it gets too high,
That's true.
like if the 30-year, for instance, gets above 5, or the 10-year gets above 4.6, 4.7, that's when you're going to see some policy shift, and maybe people will change their minds at the top.
Yeah, and like that's the auction process, which is important. So the government will say, I'm going to issue this much debt at 10 years or 30 years or whatever. And then people who are participating in that will say, okay, I think you have too much deficit that's happening here. So they'll demand more yield because they're taking on the debt of the government.
More risk.
Yeah, more risk, exactly. And so the bond market, one, is so much bigger than the stock market.
Yes.
But it tells us expectations of growth and inflation and risk. It's so important.
Also, the one thing you need to know about the bond market is that bond prices and yields move inverse to each other.
Oh, that's true.
So if yields are going up, that means people are selling bonds. And if people are buying bonds, that means yield is going down. And that just has to do with supply and demand. It's simple math, but that's it took me like a good 6 months to wrap my head around that one back in the day.
Yeah, seesaw.
Yes.
Seesaw.
Thanks, guys.
Yeah.